The biggest risk to Bitcoin and crypto prices right now isn't even crypto itself. It's something much bigger than that. And today I want to do something I haven't done in quite a while and take a macro look at what's actually happening in the broader equities market at the moment, because there are some murmurs at the moment that things are starting to become a little bit unsettled. And I want to take an objective look at the charts to see what I'm actually seeing from a technical point of view and a momentum point of view, and what are the trade scenarios that I am executing, pivoting around price action. So today's video is going to be, I think, quite alpha packed, because we're going to take a very different look at the market to how I normally look at things on the channel. And I think this will actually really help you guys kind of think about your positioning and think about Bitcoin in the broader context of macro markets, because it's not just about Bitcoin. But that being said, let's start with Bitcoin for a little bit and just talk about what has happened over the last 24 hours. I talked about in yesterday's video the fact that we would come up to test this low time frame pivot. I said if we get above that level, I'd be interested in looking at a long, but that's not what happened. We couldn't get above the level again, once again rejecting at this range. And this is just showing right now there's a lot of sell pressure. There's a lot of resistance for Bitcoin. The H1 noodle is something that I'm currently using, as you can see, to dictate the trend that we're in. And what I'm establishing right now is that we are making lower lows on the chart as well as lower highs as well. So objectively, this is pretty bearish price action for Bitcoin. In the shorter term, I want to see if we can potentially flip and get back above the H1 to head towards the low time frame pivot at 79 to 80K. If not, and if this is really, a rejection, we're going to roll over again here on Bitcoin, almost looking like a head and shoulders pattern, then potentially we're going to come back down and sweep the 2024 breakout level. And we'll discuss the macro price action for Bitcoin and what I think my targets are later in the video. But as you can see, this is the level that we broke out of, firstly making a high in 2024 and then breaking out later in the year. And we're now coming back down and testing that level at 74K. So unless we can get back above this noodle, which is a momentum indicator I like to use, I do think we'll come back down to the breakout level here. So I mean, really just using this as a pivot point and then trying to look at price action in terms of momentum. So are we making higher highs? Are we making lower lows? And just trying to assert how the momentum looks on the lower time frames. It's pretty hard to trade because it is very choppy, but I'm just using this to assert my short-term bias in the market. But before we go back into Bitcoin and look at maybe what can happen, not just from a 1, 2, 3 day perspective, but from a higher time frame perspective, I want to discuss what's happening in the equities market, because actually a lot of my trading right now and a lot of my thinking around the market is centered around what I do think, and I do have a bias, is going to happen to equities. So firstly, let's take a look at the S&P. You can see on the monthly and the weekly chart, we've been in a channel pretty much since that March 2020 low. We've been going up and just making higher highs and higher lows on the S&P 500. And if you look at the Nasdaq, it's been the exact same thing. It's essentially in the same channel. The only thing we don't have is that strong wick low in 2020. You can see it's a little bit higher, so it's not quite as aligned as the S&P index. So you can see that right now we are coming up to the top of this channel. Now, there is a chance, of course, that we could keep grinding up and just squeezing up a little bit, or of course, getting a confirmed breakout above, which would obviously send equities on a parabola. However, I think it's important to note as a trader, as an investor, that resistance is resistance until proven otherwise. So that is the mindset that I am having here when I'm assessing the S&P 500. I do think there is resistance in this zone, and I do think if there were going to be a pullback, we're pretty close to it. Now, it doesn't mean that the market needs to crash tomorrow or next week, because this is a monthly chart, but at some point in the next 2 months, I am expecting at some point we are going to get a bit of a pullback on the S&P 500. But how do we actually make that actionable? Well, what we can do is we can go down the time frame. So typically with macro trends, you want to look at a higher time frame trend. You can see this is clearly bullish. You can see the weekly and the monthly breakout level at 6,000. Now we head to the daily trend and we want to look at price action. So what I'm seeing, and you can flip over to the line chart to make things just a little bit easier to understand and conceptualize here, is I'm seeing higher lows. So this is still a bull trend. There is an ascending channel since 2025 in the middle of a much bigger macro channel since 2020, as you can see on the monthly. And what I'm seeing is higher highs for the S&P overall. So you see higher highs, and I'm also seeing higher lows. So until proven otherwise, until we make a lower low, you have to default be bullish on the stock market, right? The only thing I'm just warning about right now is the fact that we have these highs here, these equal highs. So this is a failure to break above. This is basically a sign that momentum is starting to wane just a tad in the stock market. And we are starting to also cross this middle region of the channel. And you can see this has been a key pivot point for the chart, retesting this zone many times. If we do lose this zone, then I think we may come down and test this low. And that's where things get really, really interesting. This low for me is your structural low on the daily. So this is the level that we need to hold to keep the uptrend of higher lows and higher highs on the S&P. So I wouldn't be panicking in the stock market, even if it pulls down to this level here, where I would start to look for potential short opportunities and start to de-risk even further across crypto and across my equities positions, and potentially metals as well. I'll talk about how they might be impacted in a few minutes. I would start to get concerned if we did start to break down and close below this level, because if we lose this level, then the likelihood of us losing the channel is also quite high. And then the next major support is on the weekly breakout. Now, of course, we have micro supports, like you have all of the prior lows, but the big support going back to the monthly chart, and you'll also see it on the weekly chart, is this this weekly breakout level here, which took us back to the channel high. So for me, this would be the logical stopping point if equities were to pull back, coming back down to the breakout zone. And then in terms of actually being able to capture that trade to the 6100 level, we would obviously be looking more on the lower timeframes like the daily to see whether we actually break structure here. So I think the way that and what I'm doing every single day is I'm just assessing equities. I'm really trying to look at momentum across the stock market, and I'll talk about the Nasdaq and some specific stocks in a second, in order to assert where the overall trend of the market is. Because obviously if equities keep going up and we keep following this channel to the upside, potentially if we break out of the channel, that would be very good for Bitcoin, right? And that would be very good for crypto and just good for risk in general. If we did get a breakout to the upside, that is always an assumption that we can make if we do break. However, until that happens, you have to assume resistance is resistance until proven otherwise. And that is how I'm treating it in my mind. So going through now, so you're prepared, the framework that I'll be using. Make sure to subscribe and hit the post notification bell, by the way, because if we do get a breakout to the upside or a breakdown and we break structure, I'll let you know, and I'll let you know how that is impacting my positioning right now. I just think after such a big run in equities, we do have to be a little bit more wary than usual. So obviously, the trend has been up and to the right. It's kind of hard to fade the trend from a macro perspective, but given, and we're going to speak about it in a second, some of the overvaluation fears that are creeping in, given some of the signs that we are seeing from the market, from a technical and from some of the headlines we're getting now, I think you just have to be a little bit wary in this zone. It's a little bit dicey. I also think gold rocketing over the last month or so has not been a coincidence, of course, until its recent pullback. Now looking at the Nasdaq, this is quite similar to the S&P. It's in a similar looking channel. Going to the daily, you can also see you have higher highs and higher lows. On the Nasdaq, it's a bit tighter. It's exhibiting more weakness because it's some of the Mag 7 that, like Nvidia, which has been selling off in recent times. By the way, I think Nvidia probably comes down to this 167 to 168 zone. But going back to the Nasdaq, you can see that this is the level at 25,149. So from this level, it's like 1.23%. That is providing market structure for Nasdaq. So if it does break down below this zone, we've actually broken market structure, and you could potentially be looking at a channel break, or at least the tag of the channel low. And then what happens in terms of the reaction on the retest will dictate whether we go lower again. So markets are very much about not just identifying levels and saying, oh, if we break this level, this is going to happen, or if we break out from here, then we're going to go up. It's all about the reaction in that zone. What's the buy velocity? Is it reacting strongly? Is it reacting weakly? Is there bullish news on that day, and is it reacting bullishly? Is it reacting bearishly to bullish news at a support zone? That's a sign that price is likely going to go lower. All of this stuff we look at, and I've been looking at on Bitcoin as well, to assert what the demand is. And looking at some of the data on Bitcoin, what I could tell you is that support in the 74K level is really strong, but there isn't much support to be buying much higher right now. So that is definitely capping price. And it's why I think objectively your bias has to be a little bit negative on Bitcoin right now. That's not saying we can't pivot. And I'll speak about the higher time frame trend later. It's not saying we can't get back above the H4, which is also a key level. There's kind of a stacked level of confluence here in terms of resistance. You've got your low time frame pivot at 79, you've got the noodle here at 80, and then you've got the prior range low at 81. So this is a big level of resistance, and it's just proving to be too much for Bitcoin right now, which is kind of skewing my bias a little bit more to the downside. I guess the only concern that I'll bring up in today's video, I'm not making this video to be ultra bearish. I'm just giving you an objective look on the market, what my plan is, and what my invalidations are. I guess the concern I have is that Bitcoin looks this week and equities are rejecting off the channel high. Now, that doesn't guarantee that equities are going to come down, but it does beg the question, like if equities do go down 10%, like let's say we somehow did get a channel breakdown and we went down 5% or 10% back to the weekly breakout level, like what would happen to Bitcoin in that scenario? And I think that would be a great test for Bitcoin because obviously, it's been weak whilst equities are relatively strong. Does that weakness continue? And does it get even weaker if equities drop, or does it actually hold up and start to act strong in the face of adversity? And then when the equities market recovers, is Bitcoin actually in a really strong position to outperform? That is a question we don't have the answer to yet, but I'll be watching the correlation between Bitcoin and equities very closely, especially in the event of downside. If I had to predict right now, I would say that Bitcoin would likely get affected still pretty strongly, probably in line with equities, another 10 to 15% pullback if equities went down 10 to 11%, just because the relative strength is not giving me any confidence that'll be any different this time. Will Clemente had a post, and I kind of resonated with this post. He said, vibes feeling off for tech. Credit spreads creeping up, private credit breaking down. Clearly weird stuff going on at OpenAI. Obviously, we saw this headline, the $100 billion mega deal between OpenAI and NVIDIA is now on ice. Microsoft turned out to have ultra-concentrated cloud service to them. Mag 7 stopping buybacks to full port AI CapEx. Impossible to call tops, but... So, I read this and I've also been reading the headlines, and then I went onto the chart to see what the chart was saying, and there is a potential double top formation here. It's very early to call. This is the thing with equities. Because they've been up and to the right, you can't really call these tops. The only thing I will say is that we have mostly had higher highs. Like you could see pretty much every single time we put in a high, it is higher. The only exception was this lower high here. Then that actually triggered a bigger pullback. So the first lower high triggered a big pullback. Then it's all been higher highs since then. This is the first time we've failed to make a higher high since we saw this pullback, which took us down on the S&P 5%. So on the Nasdaq, that would probably be closer to like 8 to 10% given the relative weakness of the Mag 7 right now. So the fact we have these equal highs here is just one sign on the charts that something might be brewing, and clearly, a lot of the headlines that are now coming out are starting to suggest there's just some off vibes in the market at the moment, and that is only natural after valuations have crept up so aggressively. I'm probably going to do a separate video on this on my AI channel, but there's definitely a compelling case that for the AI bubble, not in terms of its impact on humanity. We all know it's going to have a massive impact and probably great productivity increases, but we also know there's like a circular financing loop where a lot of these companies would fund each other and do deals with each other, which would pump up the market caps overall, inflate the indexes. This would inflate the valuations of equities on their private markets as well. So, the VCs would invest in companies at much higher valuations because the comparables were so much higher because they've circular finance. So I'll probably do a dedicated video on that because it's fascinating. I don't think that bubble is going to burst in the next few months, by the way. I think that is something that would take a little bit longer to play out. But I think at the moment, what's happening is the cracks are just starting to show a little bit. As Fajal says here, what happens to market structure when Mag 7 buybacks disappear this year? Think diversifying out of mega cap tech is an important theme to consider this year. And I'll get in a second into what I'm personally doing. Felix says here, the smartest people in the world are selling their companies at the exact same time. SpaceX, OpenAI, we know there's been obviously the SpaceX merger. OpenAI has been raising a lot. They're going to be IPOing very soon. Anthropic IPOing as well. So lots of these companies rushing to IPO. And that was kind of a similar theme that we saw during like the dot-com bubble as well. A lot of companies IPOing, trying to take advantage of the gold rush and get like quick exits, quick cash, and then obviously a big collapse followed. Doesn't necessarily mean this will follow the exact same pattern. But I do honestly think, like objectively looking at the market, looking at the macro trends, and then looking at the technical trends as well, 2026 is probably the year where equities put in a peak. And I said this at the start of the year as well. That was one of my predictions for this year. When it's going to happen, nobody knows. And that's why I think it's so important now to just be paying attention to market structure. And that's why I want you to watch all these videos on this channel, because we're going to be looking at this every single day. If the market structure shifts, there's actually great trading opportunity off the back of that, whether it's shorting opportunity, whether it's longing opportunity, if there is a compelling long case as well. So back to Bitcoin, and then I'll get into what I'm doing. Bitcoin has a few pretty key levels. So right now, it's at the 75K level. This is a very key level on the weekly right now. Obviously, in terms of lower time frame trading, you clearly have that overhead resistance on the daily, and then I open the video with the hourly pivot as well. So this is something that I'm tracking on the hourly in order to manage my positions, because if Bitcoin starts coming down here and reacts badly to this breakout level, like I'm going to hedge short probably, across a variety of altcoins, even though they're already down, to hedge my long-term positioning, because the likelihood of us coming down even lower at that point becomes much higher. And then you have your prior all-time highs in 2021 at 65K, which really start to come into play. So this is an idea I have, but obviously you can't short at a macro support level. Like this is still support until proven otherwise. So I would only short if the microstructure shift started to look negative. And I think in terms of being a trader and even just being an investor and managing your positions, it's so important that you work your way down from high time frames to lower time frames. Like I see people trading off the back of a high time frame level. High time frame levels are great to understand support and resistance and general market structure, but your actual execution is obviously going to happen on a lower time frame, keeping the confluence of the higher time frame trend in mind. So I think that's a really important concept that you have to understand, because even though Bitcoin looks weakened out, you could potentially try a scalp short around this level to the breakout level. There's still major support until proven otherwise at this 73 to 74K zone. But if we started to break below this zone, then I'd seriously consider maybe a deeper correction into prior all-time highs. If we start losing prior all-time highs, like this is big support, and this is a level where I'd be interested in loading up, and this is a level that I think is going to provide major support. If we start to lose those 2021 highs, I would start to get quite concerned about Bitcoin. Like, I'm not so concerned now because we are at support, and then there's more support here at 65. If we started to chop below that level, I would start to get really concerned that, I think Bitcoin would recover over a multi-year period, but that this bear market is going to last a lot longer than people think. Almost our best case scenario would be to flush into this zone, get a strong reaction, and then start to work our way up and then have a run towards the second half of the year. Anything's on the table, but obviously assessing the market in confluence with equities. How am I positioned right now? Because that's something you'll probably be wondering. Right now I'm around 45% cash, so I made some buys into gold. I was sharing them in my Discord, also referenced them on the show. I've been buying gold. I bought some at 5,100. I bought some at 4,400. I bought some at 4,600. Pretty much just averaging around this zone in general, because it's the first dip we've had in quite some time. I do think for once, if equities did have a pullback, gold would probably come with it, because it's been on such a strong run, and silver included. We are seeing a bit of a relief rally now, but I think it could potentially pause for a little bit. The macro trend for gold over a multi-year period is extremely strong, so I'm trying to maintain some allocation to it as an asset. But in terms of me buying even more gold, I'm going to chill out for a little bit and wait to see if we do consolidate, because I still think this is likely to be a multi-month top on gold. So I'm roughly 45% cash right now, because I do think cash is the best position in the market to be in. Cash gives you optionality. Cash gives me the ability to trade a breakout if we get one. It also gives me the ability to trade a breakdown if we get one. And right now, I think you have to remain nimble and not be too stuck in your bias. Now, I do have obviously long-term Bitcoin, long-term altcoins, and long-term equities, but I'm treating that very separate from the 45% cash part of my portfolio, which I essentially consider the active trading part of my portfolio. Now, I understand for other people, depending on the amount of capital you have, you might want to size differently. Like if you have less capital, then you might be more skewed long-term, less to trading. You might even be skewed more to trading. It really depends on how you behave, your edge in the market, and your objectives in the market. But I will say right now, I think cash is not a bad position to be in, especially considering the dollar is getting a bit of a bounce as well. Obviously, Fed Chair Walsh was announced as the new Fed, so the dollar is getting a little bit of support off the back of that, and is likely going to see the dollar trade higher, in my opinion. Even though I don't think it goes on a big run, I think it just consolidates and maybe pushes back towards this $100 level. You can see it's ping-ponging in a range now between 96, which are the lows that actually held, and then your range high 100. So it'd be interesting if we got more mean reversion into that area. I think that could put a little bit more pressure on equities as well. So there's no real rush right now for me to allocate my capital. The only buy I made a little bit of the other day was uranium. I'll probably speak about this in another video, but there's a lot of nuclear demand coming. Trump just signed a deal to quadruple nuclear production in the US. China's investing a lot into nuclear production. It's because they realize that although they're very committed to renewables. Renewables don't have the greatest uptime. Like solar's only 25 to 35% uptime, whereas nuclear is 90 to 95% uptime. So especially with AI and all the demand for data centers, you're obviously going to need uranium and you're going to need solid power that provides through nuclear. So for me, it made sense to add some to my portfolio. The copper position in my portfolio is very similar. Like copper for me is acting as a bet on AI data center growth, but most importantly, because that's probably only like 7 to 10% of the equation, the bet I'm making on copper is on the upside that we are likely going to get from the supply crunch that we are likely going to see. However, in terms of adding significantly to commodities at these levels, I also don't feel that compelled. I added a little bit to diversify out against other markets because they could still do well if there was an equities drawdown, but trying to maintain a larger cash position because hyper volatility creates hyper opportunity. So I'm okay to give up a little bit of inflation to give myself optionality in what is going to be a very, very hyper volatile year. I think this year is the most important year ever to be paying attention to market structure, to be paying attention to what's happening on the charts, because there's going to be so much opportunity and there's also going to be so much volatility that is really going to shake people out and catch them off guard if they are not paying the necessary attention to the market. I was going to go through some of my altcoin outliers today, but I think I'll save that for a future video because I wanted to keep this video short, and to be honest, the altcoin market's quite boring. I'll go over a couple things now that I'm looking at, though. I'll talk about the setups later. Pump Fund, I think there's a decent setup here if it starts to show some strength, so it's on my watch list, but no buy yet. Hyperliquid starting to now show some weakness. Looks like it did put in a local top. For me and Hyperliquid, I would actually like to see a deeper retest of these lows here back into the noodle at 28. That would be a higher confidence position for me because, I mean, technically you've got this H4 trend here, but you've got these lows at the 28 region. So I feel like buying here, I'm opening up a little bit too much of a gap. Obviously, if I was using leverage, if I was just adding to my spot bags, which I'm not right now because I'm already comfortable in my position, then it wouldn't matter as much. But if I'm looking at a leverage trade, which is more so the MO with Hyperliquid, I'm looking to see how it reacts in this zone. If we pull back into this zone and get a really strong reaction, then I actually might consider going long because the structure for Hyper actually looks pretty good. And I think this is something that could push to $40, $50, but the problem is it's not just about whether you think there's an upwards bias, it's about whether you think you can get an entry. And then the other basket of assets that I'm currently considering are like the altcoins that have showed strong PMF, like Mantle, for example. And I'm just trying to pre-prepare. Like if Bitcoin did break down from that level that we discussed, the 2024 breakout level, you know, what entries and solid alts could I get? And I'm looking at assets like MNT where you had this pretty solid trading range between 55 and 60 cents. Like this would be a logical stopping point for MNT if we were to go down there. So assets like MNT, ZEC actually did break down from its 300 level. The next level is 230. That's probably the level where I'd be considering a DCA. I'm looking at other coins that have shown a lot of outlier strength, like Canton. This could potentially break down and give me a deeper entry. I'm not really interested in buying this, even though I'm bullish. I already hold some because I think it's been on a big run against the market, and I want to see if it comes back to parity and gives me a lower entry. So if we break down from this channel, I actually think it could create an entry by sweeping these lows here. Let's see. But this is one that I'm monitoring. It's been really, really strong. I just don't really want to buy into strength right now, considering that the market overall looks shaky. And if the market downturns, outperformers can actually flip pretty quickly to become underperformers. Last bit of alpha today, because this is going to be happening tonight, I think in the morning if you're in the US, you've got the Claude Sonnet 5 release, albeit probably not going to be as monumental as Opus 5, but it still will be Claude's best model and is likely going to make agent capabilities even more powerful. The context will be better. It's going to be cheaper. It's going to have dev team mode. It's going to be crazy. So I'm waking up early tomorrow morning, 6 a.m., skipping my gym session, taking a rest day, and I'm going to spend the first 4 hours of the day just absorbing, learning, and testing this new Claude. I'll do a video on the AI channel, AI Edge, when that's out. If you're not subscribed to that, I'll leave a link in the description below. Make sure you subscribe because we're producing some pretty banger content there. And a big focus of mine at the moment, and the Discord guys know this, is I'm really focusing on building AI systems for my trading. I think it's so important that you use this technology in order to enhance your trading. And for me, that's the best use case. So I'm talking automated market reports in the morning. I'm talking custom indicators. I'm talking automated tracking of your watch list so you can get a message on Telegram when a validation or an invalidation trigger hits. So you don't have to rely on singular levels on TradingView. So you can actually stack confluences, fundamental, technical, and multiple technical triggers at once and get like probability scores, risk scores, and suggestions. That's the stuff that I'm building for myself. So in terms of AI, You want to automate the stuff that's actually going to impact your life. There are a few things on the business front I'm automating, and then trading is a big focus. So I will be doing a lot of content on that. When I'm comfortable with my systems, I'm getting there, but I want to make sure when I create videos on it, it's actually good stuff for you guys. So hopefully you enjoyed this video, a bit of a different one, but if you like this format, let me know, and I'll see you in the next one. Have a lovely rest of your day. Peace out.